Hi everyone, this is Yamini Sagar, founder and CEO of Instarails, where we are modernizing global money movement. Today, our episode covers the basics about stablecoins, as a lot of people have questions about it and are not very comfortable with it. Again, just a bit of legal disclaimer. This video is only for educational purposes and it does not give you any financial or investment advice. So, with that, let's dive in. So, what is a stablecoin? I'm very surprised by how a lot of people don't understand what stablecoin means. And a lot of them think that it's a cryptocurrency, and that's why it's very risky and we do not want to touch it. However, let me tell you that stablecoins, especially for the ones who understand it, fiat-backed stablecoins is what we normally deal with, are a dollar that is represented digitally. So it is essentially a dollar, same as a dollar. Now, what happens in the background is that the company that is issuing the stablecoins is taking your $1, putting it in the reserves to make it simple, and investing it in a treasury bond and giving you a digital representation of that dollar. So every stablecoin that you get, that you convert for a dollar to a stablecoin, that dollar is invested in a reserve and it is a less riskier asset compared to cryptocurrencies. And I say dollar because we are based in the US. But if you look at a lot of other countries, they are also creating their own stablecoins with their own national currency. So I hope that helps. So where does it travel, right? Because it's a digital dollar, it's essentially held in a wallet, and that wallet is recorded on the blockchain, and that is how it travels. So, say if I am paying my hairstylist in stablecoins, then it's just moving from my wallet to her wallet, and that transaction gets recorded on the blockchain. So, every holder has a wallet, every transaction gets recorded on the blockchain ledger. And the best part is this happens in real time, 24 by 7. No bank holidays, weekends impact this. And all of these transactions are done at a fraction of the cost. So, who actually benefits from stablecoins? So, let's look at all the participants who could benefit from it. The first one is the merchant. So, I gave you the example of my hairstylist. Say, my hairstylist today is accepting payments with a credit card but what happens is with a credit card, there is like they had to deal with chargebacks, disputes. So it's not like guaranteed money if someone disputes it. Plus, they don't get instant settlement with a credit card. It takes days to settle. And sometimes, if the stylist is nice, she might even pay the interchange fees instead of letting the customers pay for her. So these are all the risks that come with other forms of payments, especially credit cards. But with the stable coins, if I pay her in stablecoins, she gets it immediately in her wallet, 24 by 7, instantly. And the best part is she can also do this for small, really, really small payments. Even for pennies, she can get paid with stablecoins. And the best part is that she can cash it out to dollars whenever she needs it. So a merchant definitely benefits from stablecoin payments. So how does a consumer benefit from it? So say if I am holding stablecoins in my wallet and now I'm paying my hairstylist with it, then what happens is I don't have to pay the 1.5 to 5%, whatever the fees, interchange fees or card fees. I don't have to pay that. It's free. And then there's no minimums as well. And say if I'm not using it for payment and it's sitting in my wallet, then most wallet providers, they also give you interest on your stable coins. So you are earning interest while it is sitting in your wallet. So that's how I can benefit from converting my money into stable coins. So how does the government benefit from it? So every stablecoin that is issued is actually invested into reserves, and that is in US Treasury bills, bonds, and so it makes it helps the government because more stablecoins means more demand for T-bills, and this demand could go to billions, trillions. So that's how the government benefits from it. So how does the issuer benefit from it? So issuers, they like Circle or Paxos, they actually take the dollar and they invest it in treasuries, right? In reserves. And then what happens is they earn interest on those treasuries. What they also do is they will also build products on top of stablecoins and then charge fees for those. So that's another way for them to make money. So that's how everyone benefits: merchants, consumers, governments, and the issuer as well. So remember that stablecoins are just digital dollars, same trust, faster rails, 24 by 7. And I am Yamini Sagar, the founder and CEO of Instarails. So if you are paying offshore vendors or contractors and struggling with high fees and delayed payments, please reach out to us at Instarails at info@instarails.io. Talk to you soon. Bye.